Hello, hello, and welcome to February 22nd. Alpha's lead American Express 135%. Let's go look at that. 135% right there. $605 in the profit zone against 1879 on the ode. Boy, if we can get out up here somewhere around that $600, that'll be almost a 30% cut down on the owed money. That is what works. Losers become winners. Stick with your system. I had a call from this morning from a classmate, and he was confused. What system? He says, find something that's going to work for you, and then that's what you're going to have to go for. All right. So, uh, okay. All right. So there we are now. We are in that dilemma. Last bar low or lower high, lower low, higher low. And that is we're going to be that is why I actually got into the 135 was the lower low, higher low, lower low, because the last bar low would have been here at the top of this candle when American Express was like 105% a couple of days ago. So we'll just ride this out and start looking for a doji zone up here. That's where the money's going to be taken out, somewhere up in here in the doji zone. All right, that concludes with American Express for today. Let's go on to another 100%er. Yes. And the one that I am totally surprised, because if you guys have been following me the last few days, like, where are these guys making any money with all their ships stuck around the world, not going anywhere? I mean, right off the coast here in Southern California, off Long Beach, between Long Beach, California, and Huntington Beach, there's like a half a dozen these white ghosts out there on the horizon, and they're just dropped anchor and sitting there waiting. But it doesn't matter. We are traders and technical traders, and that's what it was. We got into a nice situation. Now look at here is my rating systems. I had a C up from one of my softwares. I had a buy from another software, and I had applied volatility at 2. So this worked out real nice. And this again, this is a 552 prime profit zone today against 1968 on the O. Now we are past our third ratio, but I do not have the higher low, lower high yet. But what I will do, I will go last bar low. If it's below the third ratio and we do not have our condition, we have to initiate rule number 2. And rule number 2 is protect profit. We're over 100%. Those are called home runs in the options world, and they're not supposed to be all that common. Well, you go tell that to the results we had in the last couple of weeks when we keep hitting over these getting into these 100% zones. So we're looking at a nice position of 100% on last bar low at $79 right there. I'm not giving it any kind of buffer. $79. Take me out. I'll take that money and cut this O down. If that O can come in at $500, that'll be a 25% knockoff on the 1968. Going on now to Bank of America at 83. Not bad. 83. Profit zone's profit. Now, Bank of America finally, let me zoom in here. Bank of America finally closed above its third ratio today. Right there. It closed above the third ratio. And now we are waiting for our lower low, higher lows. We are not over 100% RRI, so I will not initiate a last bar low here. I will only initiate the last bar low on ROI 100s or better. And then it's going to be a chicken or egg situation. Which of the two am I going to go with? Now, one clue could be very well is right here in stochastics. If stochastics is over a 80 value, excuse me, over 80 value, and you hear, oh, when it's over 80, you're supposed to go short. No, when it's over 80, it's strength. When it's over 95 STO, then you start looking for some shorts, or 90, depending where you want to go, but not 80. 80 it's just getting started. It's just like ready to roll. So don't go shorting over just because it crosses over 80. I mean, look here. It crossed over 80 here, and it just flatlined, and now it's moving up. And that's money in your pocket, not the market's pocket. Okay, So we would we'll look for a lot lower, higher low, lower low, higher low for an exit. We get over the ROI 100, then we're going to be looking at that situation. Which of the two we're going to pick? Okay, it takes us now down to Berkshire Hathaway, Berkshire. Remember, Lord of the Rings. And one character says to the other, if we don't do this, there'll be no Shire. Well, that's right. If we don't trade, there'll be no money. All right, look at this. We close above our third ratio here on Berkshire Buffets. And we got our nice push here. So we're anticipating a higher low over on this side tomorrow. And then that will establish an exit right there. We had one established here, and now we're going here. And again, if it gets over 100 ROI, then we're going to be at that fork of the road. Okay, that takes us down to TJ Maxx. About time. These people owe me a ton of money. I mean, they owe a pretty penny. Let's go look. Let's go look at that chart. Okay, right there, they owe 2,600 on here, and only got one contract because this is a slow account. Oh, by the way, take a look at the account. Look at the year to date on Alpha's performance. We hit over 6,228. The start of the start of this program, it was, let's put in that 6,228 minus 5,533 was the beginning of the amount. We're at $670 in the profit, divided by the 555.33 as a percentage, and we get, voila, we are 12.5% ahead for year to date on the alphas. 12.5%. Do you portfolio managers shoot? The average portfolio manager is 12, or maybe slightly more. The average, but there are more. You know, when you say average 12, you know what that means? That there's somebody out there who's doing more than the average. But the bottom line is that we're doing real good here at Alphas. Let's see if it'll keep up to the journey to the July 1st, which is the conclusion of this challenge. Okay, so we have TJ Maxx running at 21%, and it's pushing up on that third ratio. It's really trying to push up there, but nothing else we can do about it right now. Going on now to Capri. Capri joined us this morning, and kind of nice. Right out of the gate, it's already in the profit zone, but right there, we're in the profit zone. Let me zoom out now. Okay, get more perspective. Our stop is right here at the 43.45. Now let's check that. 43.45. That's our stop right there. There's our 3-to-1, and it's starting to do a little bit of climbing. Now, what is possibly going on here? What possibly going on here is that this is accumulation. When you see this going down, the institutions are probably buying into Capri, but they can't do it all at one time because they'll shock the market. So they buy in slowly, and the price starts rising slowly. So we'll be watching this, of course, because this Capri still owes me a ton of money, 4,600 over. All right, now XLC is our next person of interest at 6%. Now, do note, this is a put. Yes, the scanner yesterday came up with a put. XLC qualified. It had the right option criteria and are in the trade. So there we are at XLC at 6%, and our third ratio is right in this zone here. You can see a nice gap here, So right in here, we're going to be looking to get to our third ROI. We also have already moved the stop down to 73.90. That's going to be our stop at 73.90. Let's go take a look. 73.95. Okay, I'll do a little adjustment there after. Oh, we're out of time. But that was the end of the positive territory report. And binary options, I'm still in study. So hit me by 254, and I'll continue learning on the binaries. Until then, that is the conclusion of today's report of Losers Become Winners for February 26th, American Express at 135%. Thank you very much for stopping by and checking it out.